All right, class, we're going to move on with the PowerPoints here for chapter 4. This is going to be the second part. So we're going to start on chapter 4 PowerPoints, slide number 16. And in the part 1 of the PowerPoints on the classified balance sheet, we spoke about the 4 types of assets with the sippy cup and things like that. So now we're going to work on the right-hand side of the accounting equation, which is also the same, pretty much the equation for the balance sheet. And again, that's assets equals liabilities plus stockholders' equity. So we've done the assets. Now let's do the liability section and the stockholders' equity section. So we're going to start on chapter 4, slide 16, and we're going to start with the liabilities. So the liability section, as I spoke about at the very beginning of the part 1 lecture, they break up into 2 categories, and that's current and long-term. And literally the same reasoning behind a current asset is the reasoning behind a current liability or a long-term liability. And it's the 1-year cutoff, okay? So anything that's going to be due within a year is a current liability. So typically your accounts payable, money that you owe people don't lend you money up front without knowing when they're going to get their money back. So if you borrow money from, say, a bank, and it's a car loan and it's a 5-year loan, that's a long-term liability. If you borrow money for 6 months from a bank, that's a current liability. You're planning on paying it back within a year. Okay. If you purchase supplies from a company, they expect you to pay for those supplies pretty much within a month or 2. So those are the difference between current liabilities and long-term liabilities. Sorry about that. So current liabilities are less than a year. Long-term liabilities are longer than a year, hence the reason long-term. All right. So it's pretty simple when it comes to talking about liabilities and the time frame on them. As you look at number 17, it says current liabilities are obligations, you all know what an obligation is. Obligations that must be satisfied within a year. Examples, here's the key that I want you to pay attention to, are some of the examples of current liabilities. Accounts payable, short-term notes payable, salaries payable, wages payable, taxes payable, interest payable, and unearned revenue. Those are some of the examples of a current liability. Slide 18 talks about long-term liabilities, and you can see here it's debts or obligations, whatever way you want to call it, of the business that fall due more than a year in the future, meaning it's longer than a year. Examples, a mortgage payable. If you buy a house, typically you don't pay for your house within a year. If you're able to pay your mortgage off in a year, then you either won the lotto or something happened. But mortgages are typically either 10, 15, or 30-year mortgages.
Felicia.
Jeez. Hang on 1 second, sorry. All right, so back to the slide. Sorry for all these interruptions. It's 2 o'clock and my phone seems to be ringing off the hook. So long-term liabilities, again, were mortgages, long-term notes, bonds payable, things like that. Slide 19, then it goes into our stockholders' equity section. So again, like we've said since day 1, stockholders' equity is made up of 2 parts. It's contributed capital, which has the common stock written underneath it, okay? And then retained earnings. Those are your 2 sections for stockholders' equity. And they're pretty much the same sections all the way through. From day 1, we've talked about common stock, and I've tried to put that other caveat to it, contributed capital or common stock, so that this way you associate those 2 with each other, and then you have your retained earnings. So again, I want to point out one thing. Again, remember your accounting equation. Assets equals liabilities plus stockholders' equity. Well, there was 4 parts under the asset section. So 4 equals, there was 2 parts under your liabilities, current and long-term. And then there was 2 parts under your stockholders' equity section, which was your contributed capital, AKA common stock, and your retained earnings. So if you add up your left and right-hand sides, you still are in accounting equation balance, 4 equals 4. Just something that happens to work out that way. Slide 20. Okay, as you can see here, here's your steps for creating a classified balance sheet. Now, again, I know college students because, I've been one, I've been there, I know what it feels like. When you get to a slide that has all kinds of writing on it, it's the last thing you guys ever want to read. But what I'm going to say here is kind of arrogant to a certain extent, but what I need you guys to understand is it's not arrogance when we're trying to tell you and trying to teach you how to do something. It's arrogance when we tell you there's a slide that gives you step-by-step directions on how to do something, and then we get emails about saying, I don't know how to do this. My first question will always be, did you read your slides? Did you listen to your lecture? That's going to be my first question all the time, because there's nothing that I will test you on that I haven't spoken about via a lecture or I haven't had on a slide. I don't test you on stuff that I pull out of the air. So I want you guys to keep that in mind when you get to slides like this. Don't just disregard the fact that, it says a bunch of steps and I don't want to read it. We don't waste our time putting things on slides because we just want to make up another slide and have to go over it. We make things up on slides. We put things on slides. We save them to presentations. We save them to Vanco Hall. We talk about these slides because they're important. Okay, so I just want to throw that out there to you guys and just a little bit of food for thought when you're thinking about things that you're doing. So the first thing that you do, you set up the assets, the liabilities, the stockholder equity section. So meaning you set up your piece of paper with your assets on your left and you set it up with your liabilities and stockholders equity on the right. Now, before I go any further, I want you to just jump to slide 21. Slide 21 is an example and a template for you to follow when you're preparing a classified balance sheet. You can see step number 1 said to put all your assets on the left, liabilities and stockholders equity on the right. So as you see from the slide in 21, that's what's done right here. Okay, moving back to slide 20. It says go to the accounts in the adjusted trial balance and label each account based on its subcategory. So what you would do is you would get your adjusted trial balance and you'd go down the list. Well, assets, first under assets would be cash. Cash is a current asset, so you would put CA. When you're going down the list, if you see equipment, well, that would be property, plant, and equipment, so you'd label that PP&E. If you have income tax payable and accounts payable, you'd label them current liabilities. If you had a mortgage payable, you'd label that LTL, long-term liability. So you literally just go down your list and put each one of them into its subcategory. Do not try to cherry pick them off. When you try to cherry pick things like that, you're going to end up missing accounts. Whenever you're using adjusted trial balance or any trial balance for that matter, one of my college professors always made us have a ruler, like an actual wooden or plastic ruler with us. And because everything is in line, the ruler helped us from misreading a line, meaning you'd read a number from the below or above, sometimes and that causes a lot of mistakes just by not paying attention to detail. So even if you use a sheet of paper when you're doing this, go ahead and do that. So step 2 talks about going into the account, the adjusted trial balance, and labeling each of the accounts into its proper subcategory. Number 3, place each account and amount under the correct subcategory. So again, you would go to all the ones that say current assets and you would label them and put them under the current asset subtotal or subcategory on your classified balance sheet. So as you look on slide 21, you'll see under assets, the first item under assets where it's in bold face print, it says current assets, and it lists 3 accounts that are listed below that. Those are all the current assets for this company off of their adjusted trial balance. Same thing with investments, same thing with property, plant, and equipment. Now, the next question that I'm going to usually get whenever it comes exam time is, do I need to put the subcategory headings? And the answer is yes. Part of this is I want to see the word assets, and below that I want to see current assets. And then I want to see all the assets listed. Okay, so yes, I do want to see those category subheadings. Step 4, calculate all the subcategory totals. Now, if you look back at slide 21, you'll see that under, say, investments, there is no subcategory or subtotal. Well, that's because there's only one item in there. So if it's only one item to the subcategory, I'm not requiring you to put a total there. You can if you like, but I will not require it. But you can see under the template on 21, slide 21, you can see that the total current assets is $2,200. That is solely those 3 assets added together. If you look under property, plant, and equipment, again, total property, plant, and equipment is $33,000. That's the $35,000 plus the negative $2,000. Now, granted, it doesn't say negative there. That's where you guys need to understand, again, that accumulated depreciation is a contra asset, meaning it has the opposite balance. So there are things that you need to bring forward and remind yourselves about and continuously work towards paying attention to. Same thing on the liability side. You put all your liabilities and common stock and stuff together, and then you have your subtotals over there. Next thing you see is number 5. It says calculate the totals for the major categories, meaning all your assets together, all your liabilities, and your stockholders' equity. And the last part of that is, if you take a look at the very bottom of the example problem, you'll see that your total assets equal $40,550. If you look at the right-hand side, your total liabilities and stockholders' equity, again, we're going back to that accounting equation, which will be the accounting equation from a 100 level course that you're in now to a 600 level course at a master's degree. Assets always equal your liabilities plus stockholders' equity. And you can see here from the example problem, total assets equals total liabilities and stockholders' equity. That is the key. Again, at the end of your balance sheet needs to balance. Okay? Slide 22 is a pretty simple slide. It just asks you to go through these 12 different types of accounts and just to indicate where they would fit. And I'm going to ask you to do that just on a separate sheet of paper, just a scrap sheet of paper, and hold on to it. I'm not going to do it as an assignment. I will put up a quick, I'll use this as the example problem for a homework assignment that I'm going to put up here in a few minutes. So this will be the example problem that I will use. I will reference that in the video when I go over that, but you will also have an assignment to go right along with that. Chapter 4 is a very small chapter. It just mainly is based on this here. So what we're going to do is we're going to move right through this, and I will send out an email later today letting you guys know what the next step is going to be besides